Today, I'm going to talk about ETFs and why they're such an important part of a balanced portfolio strategy. People find investing in stocks easy. You're familiar with the underlying companies, their brands. It's easy to exchange tips, and there's an instinctive connection with the companies themselves. These reflect unconscious investment biases that we all have: familiarity, social, and emotional. Very few of us have the discipline to track and study individual companies. This requires a very disciplined approach to taking profits and cutting losses, which is essential to individual stock investing. Take the recent examples of Luckin Coffee in China, Yes Bank in India, or even the Noble Group in Singapore. Without a proper disciplined approach to stock investing, you might have lost your entire investment. So if you're looking for long-term returns without the heart attacks, you need to diversify your investments into ETFs. An ETF, or exchange-traded fund, is simply a basket of securities. The securities that form the basket could be stocks, bonds, or even currencies or commodities. As the name suggests, an ETF is similar to a fund, but one that is bought and sold through a broker on a stock exchange. Funds are traditional ways in which investors achieve diversification or access to inaccessible markets. For example, index funds or investments into markets like South America or Eastern Europe. While a relatively recent innovation, ETFs have now overtaken funds in terms of size and benefits. Because they're traded on a stock market, they offer intraday liquidity and a very simplified settlement process. Also, they offer greater transparency in terms of what their holdings are or what their fees are. Fund fees include big distribution margins and can be 5 to 10 times equivalent ETFs. You may be aware that these costs can take away over 50% of your returns if not managed well. Even though ETFs are known for being low cost, one has to do a little bit of analysis to include all the possible costs that you might be exposed to. For example, bid offer spreads, brokerage, transaction tax, etc., etc. Some ETFs also quote at a premium or discount to their NAV or net asset value. This could subtract from your returns. With the huge number of ETFs available in the market, how do you choose the right one, the most efficient one for you? Fortunately, Kristal.AI has done this analysis free of cost for you, and it's available on our platform. We look at a variety of quantitative and qualitative factors before we shortlist ETFs to put on our platform. The quantitative factors include things like size, liquidity, expense ratios, etc. But we also look at Sharpe ratios and performance against benchmarks. Tax considerations may also be relevant for some investors. Among qualitative factors, we look at Morningstar ratings, as well as the nature of holdings, how concentrated or diversified they are. Some ETFs may be leveraged, or some may be very sector specific, in which case they are only applicable to a select group of investors. ETFs offer many advantages from a Kristal.AI algorithm point of view. They have the real-time data required by our algorithms, including historical returns, volatilities, etc. There are over 150 ETF providers that are competing to drive costs down. There are even some free ETFs available on our platform now. ETFs enable us to service even the smallest investor. Combined with small lot sizes and minimal execution costs, there are now over 5,000 ETFs covering all geographies and asset classes. ETFs enable us to hyper-personalize investments so that they best reflect your personal profile and comfort levels. You can express views and follow easy-to-understand themes without having to monitor individual companies. I would like to specifically mention two ETFs which are on our platform and are very thematic and relevant to today. For example, there is the BlackRock Biotechnology ETF focused on US, and there's the Global X China Biotech ETF that is focused on China. And biotech is very relevant in the current time period. Similarly, there is a water resources ETF from Invesco, and there's another water ETF from First Rest, both of which are another area of concern for investors. The ETF industry has grown rapidly to over $5.5 trillion of assets and traded on every major stock exchange in the world. They reflect a true democratization of investment solutions since they're used by high net worth, institutional investors, as well as retail investors such as yourselves. Thank you.